A very good afternoon, Matric 2025 candidates. Today we're going to be looking at November 2024 past paper. This is the question number 4 that we're going to be looking at, and it's about the cost accounting. Before I start with the question, I'd like to have a humble request from you candidates and teachers. Can you please share in your groups this content for those who are not aware of this, that will be able to consume and benefit from the content? I'll really appreciate your assistance to increase the number of people that are consuming and benefiting from this content. Now let us look at what we have for question number 4. Question number 4 is made up of 35 marks. And then a total of 25 minutes is expected for the candidate to spend on this question. 4.1 is about the flower pot manufacturers. So the company that we're going to be answering question 4 is a flower pot manufacturer. The business manufactures large concrete flower pot. The financial year end is 29 February 2024. We have the required 4.1.1 up until 4.1.3. We are required for 4.1.1 to look at the information in A, and then for 4.1.2 we are required to look at information B, as well as 4.1.3 we are required to look at information in C. Number 4.1.1 says calculate the direct raw material cost. And then 4.1.2, we need to calculate the direct labor cost. And then 4.1.3, we need to complete the factory overhead cost note. Now, so what we're going to do, we're going to look at the information for A and respond to the question, look at information for B, and then respond to the question, look at information C, and respond to the question as well. So we are not going to read everything before we respond, because this is separated and we have a proper and clear guidance in terms of where we're going to get information for each question. So we are not going to read everything. We're going to make sure that you're reading each part and respond to the question until we are done with 4.1.3. Looking at A, direct or raw material cost, the business uses high quality concrete mix to make the pot. Production requirements: 4,800 units were produced and sold during the financial year end. So they've produced and sold 4,800 units. Each complete pot requires 1.4 packets of direct material or concrete mix. The business allow a wastage of 10%. So what does that mean? It means that we need to add an extra 10% on the total of the number of hours required. Of the number of material required. Why are we doing so? It's to allow for that extra 10% of wastage that the business allow. So this 10% is a normal wastage. For that reason, it is considered in the calculation of raw material cost. The cost price of concrete mix was maintained at 125 Rand per pocket for the financial year. Now, how are we going to be able to calculate the raw material cost? In order for us to be able to calculate raw material cost, we first need to know how many direct material do we need. So we've been told that it requires 1.4 packets per unit, right? So per unit, we require 1.4 packets. And then we further told that extra 10% of normal wastage is allowed. And then finally, we are told how much does each packet of raw material cost. Now, in order to get what we are looking for, we're going to have to open the brackets and say we manufacture 4,800. Each unit requires 1.4 packet, And we are going to allow a 10% wastage, which is 1.1. Apologies here, I should 1.4. So we manufactured 4,800 units. In order to manufacture 4,800 units, we require direct material of 1.4 packet. And then we know that we are allowing for the extra 10%, which is a normal wastage, then times 1.1. Then you're going to have to then close the bracket. Apologies. Okay, we're going to have to redo it. Sorry, apologies about that. So I've already stated it's 4,800 multiplied by 1.4 multiplied by 1.1, which you all understand what all this amount relate to, as I've already explained. And then the last part that we need is to multiply by the cost price of concrete mix. So the cost price of concrete mix, it is the cost price, we are told that it is sitting at multiply by 125. And the amount that you're going to get there, it is going to be 924,000. So 924,000 will be the cost of direct material cost for the total units that we produce of 4,800. So now you have 924,000. On the next part, we're required to calculate the direct labor cost. How much does the hour that we've used cost us in order to make a production? So that's what we need to then calculate. Now, when you're looking at the direct labor cost, you are told that direct labor budgeted for the year amounted to 1,117,200. So that is the direct labor budgeted, and we are told that they are budgeted at this amount in rands. The business has 7 direct workers. Each worker is required to work 1,680 hours per year and is paid the same hourly rate. So we have 7 direct workers, so they are working directly in the production of this pot, and they are required to work 1,680 hours and they are paid the same amount per hour. So here we're just basically told the story about the workers, how many hours they need to work, and then also what are they potentially getting paid for. Now, when you're looking at the following items have not yet been recorded. One worker resigned on 31 October 2023. This worker did not work overtime. So we have one worker that was employed by the company that resigned on 31 October 2023. So we know that that period, it's basically, if you calculate for the year end of the company, it's March, April, May, June, July, August, September, October. So that means that happened in the company's when? In the company's month 8. So now what we're going to do, so in the month 8, we lost the employee. We lost one of the employee. So we need to document that month 8, one employee resigned. Month 8, one employee resigned. So we know in the month 8, we lost one employee because one employee does what? Resign. 3 of the direct workers were required to work overtime of 60 hours each during the year. overtime rate is 1.6 times the normal hourly rate. So now the more information that we are told that has not been accounted for, it's the one regarding the three direct labors. So they were required to work 60 hours each during the year, and then the overtime rate is 1.6 times. So now, what can we see here? We have a total of 7 direct workers. One resigned and we're left with 6. And of those 6, 3 of them were required to work 60 hours overtime each during the year. And then the overtime rate is 1.6. So that's all the information that we have for B. Now, how are we going to respond to that question, considering the resignation as well as the overtime? So we need to calculate the direct labor budgeted for the year. So the question is, in order for us to calculate the direct labor cost, we need to know how to account for the items that have not yet been recorded. So there is a resignation, and then also there is an overtime. So what will this have an effect on our workings? When you're speaking of resignation, the resignation, they are basically going to reduce our direct labor budgeted for the year. But the overtime, it's going to increase the direct labor budgeted for the year. Now we know the signs, how they're going to look like. Now we need to work on the actual working. So now, first we need to understand how are we going to work on this. We've already been given the information about the budget for the year, which is 1,117,200. And then we know we have a total, in this case, of 7, of 7 direct workers. Each direct worker was expected to work a total of 12 months per year. All right. However, one worker only worked for 8 months. So now, how are you going to work on this? In order to work on this, you're going to say we had 7 workers multiplied by 12, which is what was expected in terms of the months for them to work. So if you take this amount and you say 7 times 12 on your calculator, you get a total of 84. However, we unfortunately lost 4 months because of the employee that resigned. So of this 84, we unfortunately lost how much? 4 months. So we lost 4 months, and we only have a total of only 80 months that was worked for all the employees. That is as a result of resignation. So now, in order to convert this into an amount, you are going to say you know what is the budgeted labor cost. It's 1,117,200. You're then going to multiply that by 4 divided by 84. Divided by 84. So why are we dividing by 84, and why is your denominator 4? 4 is the number of months lost, and 84 is the total months that we expected we're going to have from the employees, which unfortunately we didn't have in total, but we only have 80. Then the amount that you're going to get, it's going to be minus 53,200. I've already discussed the matter of why we have 53,200 is a negative sign. It is negative because of the fact that this resignation is going to reduce what we initially budgeted to be the labor cost. Now we're going to overtime. You also need to know how are you going to calculate the overtime. Number one, we were told that each employee per year will work a total of how many hours? 1,680. And then we know that we have a total of how many employees? 7. In order for us to ascertain how much does it cost per hour for the employee to deliver the work, we need to therefore say, we know that it's 117,200. That is a budgeted labor cost. Then you need to divide that by 1,680, which is the hour per employee, and then you multiply that by 7, which is the total number of employees. Then the amount you're going to get, it's 95 rand. Means to say each employee is earning a standard 95 rand per hour. And we know that it is the same because we're told that they are earning exactly the same rate. So now you know that it's 95 rand per hour. Now the next thing that you need to ask is, how many hours am I going to therefore consider? Then you're going to multiply 95, and you're multiplying your body weight by 3 employees that work overtime. And then these employees, when they were working overtime, they worked for 60 hours each, multiplied by 60 hours. Right. So here you need to also multiply this by what? 1.6. You can either multiply this by 1.6, or you rather multiply here by 1.6. So you see, multiply by 1.6 because we're told that the rate is based on 1.6. Now, if you take 95, you multiply by 3 times 60 times 1.6, the answer that you are going to get is 27,360. So the company was supposed to pay an extra amount from initial budget of 1,117,200. Then the total, or the revised direct labor cost, therefore it should be 1,091. Apologies. 1,091,360. So if you've shown all the amount that I've shown here, you'd have gotten yourself a total of 7. And then here you would have gotten yourself a total of 4. Now we're going to look at 1.1.3. 1.1.3 required us to complete the factory overhead cost note. Now let us see what we have been provided the information here of, in order to gain a better understanding of what is happening. Extract of pre-adjustment amount on 29 February 2024, which is the year end of the company. The bookkeeper calculated factory overhead cost of 1,132,700. So that is the amount of factory overhead cost that was calculated by the bookkeeper. Other pre-adjustment amount on 29 February 2024. We have office salaries, advertising, rental on sales of departments, property, and bad debt. So these are our pre-adjustment amount for 29 February 2024. Adjustment to factory overhead. The clerk was paid a salary of 9,200 per month, which was recorded as an administration cost. 20% of 20% must be allocated to office and the rest to production. The rent of 126,000 was shared and recorded according to the following flow area by the bookkeeper. So we have a total of 600 meters squared, 400 meters squared goes to factory, 80 to office, and 122 meters squared to sales. However, since the beginning of the financial year, the owner rent has increased to 157,500 at the time of the factory has increased. As the time of the factory has increased, the bookkeeper did not consider the increase of rent of 157,500 and the following adjusted flow areas. So, which is 800, 600 meters squared for the factory, 80 meters squared, and 120 meters squared. So as you're looking at this, what is important for you to note is that we are required to complete a factory overhead cost note, right? So we are going to be looking at the factory information, not the office, neither the sales. We have been provided a lot of information here, which have been considered the pre-adjustment and the adjustment to the factory overheads. And we need to make a decision. What are we going to consider in our calculation of factory overhead, and what are we not going to consider in our factory overhead calculation? So now, first, we have been provided this information. So the information that we have been provided for the factory overhead cost, we have brought in, the examiner has already brought in the amount, so we do not have to worry about. So this amount was therefore applicable for us to calculate the factory overhead. And then if you're looking at the information we've been provided on this table, we've been provided information for office salaries, advertising, rental of sales department property, and bad debt. All these costs are considered administrative costs. They therefore not going to affect the factory overhead cost for the company. They are administrative in nature and they do not affect the factory overhead cost note. Therefore, for that reason, none of this amount should be considered. So you should not consider any of these amounts. And then adjustment to factory overheads. The clerk was paid a salary of 9,200 per month, which was recorded as an administrative cost. 20% should be located to office and the rest to the production, meaning to say to the factory. So 80% should be allocated to the factory, that's where the production is taking place. However, it was mistakenly recorded as administration cost. So how are we going to therefore make this adjustment or correction to the factory? To make this adjustment, we're going to have to say factory indirect labor cost. So you're going to say factory indirect labor cost. And then to get that amount, you need to say 9,200, which is monthly salary. You multiply by 12, which is the number of months the clerk has worked, and then you multiply that by only 80%, which is what should be allocated directly to the factory overhead. And the amount that you're going to get is going to be 88,000. 88,320. Then the second part, we are told about the rent. The rent of 126,000 was shared and recorded according to the floor area by the bookkeeper. So the rent was 126,000, but this 160,000, it has to be shared according to the meter squared. So now how are we going to share that according to the meter squared? The factory is only 400. The other 80 meters squared and 120 meters squared. However, we have further been told that the rent went up to 157,500. And the reason it went up, it's because there was an increase in the meter squared for the factory. So now, how are we going to make a correction for this rental increase that was not conceded by the bookkeeper? We're going to say factory rental, factory rental, and then we are going to say, now we know that the amounts that we should have paid at the end of the year should have been 157,500. Then, because it's shared according to meter squared, then you take the 600 meters squared over 800 meters squared, right? Then you're going to get a total. So the total you're going to get in this case, it's 118,125. That's based on the calculation. However, we need to take into account that even though there was an increase that took place that was not considered, there was a rent that was already considered. So the rent that was already considered, we need to therefore subtract. And the amount we're going to subtract, it is going to be an amount that is based on the rent of 126,000. So now you're going to say 126,000, which was based on the previous amount. Then at that point, the factory was only 400 meters squared and the total was 600 meters squared. So the amount that you are going to get, obviously, it is going to be an amount of 84,000. So now in order to get the final amount, you're going to have to say the adjusted amount, it's going to be 118,125, you minus 84 that was already taken into account. Then the balance that you're going to be left with, it is going to be 34,135, which is the correction we need to make. Now, in order to get the final corrected amount for factory overhead, you're taking what was already taken into account, then you make an adjustment for the factory indirect labor cost as well as the rental. And the amount that you're going to get, it's 1,255,145. If you've done all this work, then you find yourself in the position of 8 marks. Now we're done with the question up until 4.1.3. Now we're going to look at the next question, which in this case is 4.2. 4.2 is about the timepiece manufacturers. The business manufactures watches and is owned by Jabu Talit. The financial year end is 31 August 2024. We are given a note that we need to read and understand. Where comments or explanation are required, you should quote calculation, figures, and or trends. So what does that mean? It means that you're going to quote figures for the current year and you can, or where required, you can look at comparison in the figures this year versus figures this last year, and also maybe do the calculation for the percentages. Give an explanation or reason in each case. So you're going to have to provide also an explanation. So what you're going to be doing then in the questions that we're going to look at, which is 4.2.1 to up to 4.2.4, you're going to be providing figures, analyzing against last year, and also provide explanation for your answer. 4.2.1, which is part of our required, comment on the level of production and the break-even point on 31 August 2024. So we're currently commenting on production and break-even point. So what are the mistakes that candidates would have made in this question? They would have made a mistake to make a comment on the previous year production and break-even point, or they would have only commented on production and not break-even point, or vice versa, commenting on break-even point and not saying anything about production. So a date is very important in accounting, and you need to understand what you have been asked at that particular point in time. Now, let us look at the production and the break-even point for the current year. So when you're looking at the information about the break-even point, it is sitting here. So we have a break-even point of 6,868, and there was a number of units produced of 3,640. So as you look at that information, what do you see? You can see that based on the information, there was less less production compared to the break-even point. So that basically means that the company is running at a loss. So first thing that you can see here, you can see that the company is running at a loss. And you're going to say then, you will say the company is running at a loss, is running at a loss because they were less production compared to break even. Compared to break even point. We have been asked that we should show the figures. So now this is your time to show that you've seen where the data are sitting. So if you're looking at the break-even point is sitting at 6,868, while on the other side, if you're looking at the production, so the production unfortunately is sitting at a lesser amount. So the production is sitting at a lesser amount. So what is production sitting at? You can just add here. Oh my God. Production production is only 3,640. So production was less than what we actually made sale. Our production was less than what we require to sell in order to break even. So that is the problem. And then because this is 4 marks, that means you need 2 explanations. So the first explanation obviously would have explained that we produced less than what we require. So now you have to talk about the loss and the improvement, right? So we are going to make a loss of the difference between the production and sale. So what is the difference between the production and sale? So the loss of 3,228 unit is observed. So that basically what we can see, that we are making a loss, and the loss is made up of 3,228 unit. Now, because we were asked that we can look at the trend, so now we have to look at the trend. And in your trend, what you're gonna say? You're gonna say, even though this year we've produced less, but there is an improvement in both the production as well as the break-even point. So that there is an improvement in production as well as the break-even point from last year, from the previous year, which is a good thing. Now you're gonna have to state the amount. So how are you going to state the amount? So you're gonna say then the number of units produced improved from 2,930 to 3,614. The unit produced improved from 2,910 to 3,614. So let me say the units produced improved from 2,910 units to 3,640 units, which is a good thing. And the break-even point improved from 7,983 units to 6,868 units, which is a good thing. Now we're talking about trend or the changes, which is a good thing. So this is more than 4 marks, but it's giving indication in terms of how are you expected to respond. So when you're responding to a question of similar nature, you first interrogate what is happening in the current year, which is a comparison of break-even point this year and production this year, which in this case is 31 August 2024. And then now you look at the trend. What happened when we compare it with last year? Because in our note, we've been told that we need to look at figures, explanation, and trends. So now you then compare the two and say, I'm now making a comparison of the number of units produced and sold this year versus last year. And I'm also looking at the break-even point this year versus last year. And then you're going to say, you've seen an improvement. Yes, we are not there yet. We're still making a loss, but there has been an improvement from last year, which should be taken into account. You must be happy about that. We might not be in the level we wish to be, but we have to take into account that there is an improvement. And then there, when we are looking at that, we are going to get 4 marks, which is good, which is like great. So 4 marks if we have written the information of similar nature. Apologies, what is going on? I think my laptop is just acting up. And then now we're looking at 4.2.2. 4.2.2 asks us to comment on the gross profit earned by the business and the price charged for the watches. So now we are commenting on the gross profit and the price charged for the watches. In your opinion, explain if Jabu's customer found 2024 prices to be reasonable. Provide figures. So what mistake you would have done here? First, you would have looked at the previous year's price, which is 990 and not 1020. That's the first mistake you would have done. And you wouldn't be responding to assessing the reasonability of price per 2024 financial year. Number two, you would have looked at the gross profit and not discuss anything about the price, or you would have looked at price and not discuss anything about the gross profit. And in this case, we are asked to comment on both the gross profit and the prices and speak of the reasonability of the price charged in the 2024 financial year. So now what are you going to be saying in this case? Looking at the gross profit. So now we are going to be looking on the trend. So we're looking at how the gross profit has changed from last year. In the previous year, which was 31 August 2023, our gross profit was 960,300. But if we're looking at the current year, which is 31 August 2024, it is 1,237,600. So there is an improvement. There is an increase in the gross profit of 28.9%, which is great. So that's the first thing that need to be communicated. And then now you can look at the number of units that was sold. Now, looking at the number of units that was sold, it has also improved, which obviously influenced our gross profit. The number of units that was sold, it improved from 2,910 to 3,640. That is an improvement. That is great. That is commendable. And it's 25%. Now look at the total sales, which also does affect our gross profit. The total sales also improved from 2,880,900 to 3,712,800. And when you're looking at that, the gross profit also improved or increased by 28.9%, which is similar to gross profit. And then now we comment last on the cost price. So on the selling price rather, or the price charged. Looking at the price that is charged, it was 990 last year, and this year it 1,020. So there is also an increase of 3% on the selling price. And 3% on the selling price, it's way less than inflation, and that is justifiable and is considered reasonable. I believe the customer will be happy to see that the price was not significantly changed or increased from last year. Now, the question, the last part is that reasonable or not reasonable? It is reasonable. It is less than inflation. And also, we can see that there are changes in sales, there are changes in gross profit, and there is also an improvement in the units sold. And therefore, the customers, they are happy or they are fine or they believe that the price charge or the price increase is indeed reasonable. So now I'm just going to summarize the things that you would have put there or you would have considered when you were answering this question. As I've already stated, the first thing will be to comment on this total sales. So total sales increased. So you see an increase in the sales from 2,880,900 to 3,712,800. And that is an increase. That is an increase of 28.9%. Right, so that's the first part. Then we look at gross profit. Gross profit also improved or increased. You can say improved or increased, whatever you feel comfortable. From where are we moving from? We are moving from 960,300 and we move straight to 1,200,000